Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Wednesday, August 30th, and we're looking at DXY to start. And we discussed this yesterday, but many of you may remember, the possibility of a deviation. It looks to have been confirmed. We are now trading below, the 103.6 level. We're also trading below the long-standing kind of bearish trend that's been valid since March 7th. So certainly a feather in the cap for bulls, but we still have this 12-hour estimated 200 moving average to contend with that could end up leading to something like another deviation where we deviated up and then we deviate below. So that is certainly something to look out for. Obviously, you're seeing equities, rise a little bit as DXY is cranking lower. Crypto, unfortunately, is not rising with DXY falling. So that's something we'll discuss a little bit later. But this still seems to be generally good for risk markets as we look at equities. This S&P futures, it is obviously rising. We mentioned that 4511 number being very critical, and we got above it, late last night before dipping back to the 44.95 level, which we mentioned as, potentially the first area to long, this one being, possibly the second. But obviously, we got the first long. We eclipsed 45.11. Now we're heading higher. So pretty much, in my opinion, you do have some possibilities to get cut down around these levels. So, in my opinion, your first stop would be, and when I say stop, I mean the where it'll trade next, not like a stop loss or anything. Like it's a stop on a travel itinerary. Your next place, that I would expect is 45.45, which coincides with this high, also this high. And then you have the 45.60 level, which coincides with this high and this low. And then obviously, then you're more or less kind of firmly back in this larger range, which was, got a lot of bulls excited when we were trading in there, late July and early August. So definitely still a battle to head higher. Obviously, nice, ugly, looking Darth Maul wick, big sell-off, big buyback, obviously heading higher. So if we can get above this, let me get my little drawing back. If we can get above this recent high that got put in a couple hours ago, what I'll expect is, basically a bounce or just a clean move higher up to that 45 level. And then obviously if it can, eclipse that 45 level, then we'll head up to 45.60. And then from 45.60, that's when things get exciting. But remember, in the same sense as DXY, let me get rid of these. Same sense as DXY, if we do fail at this recent high, this could be, a larger deviation back down below. So if we do deviate back down to low, beneath the 45.11 level, then we'll look to trade to 44.95. And then I would expect, with that kind of deviation, it'll typically bring you lower. So then I would expect us to grab 44.80. So do be very careful, if maybe we make it up to 45.45 and then we get cut back down. So nothing is a given if you get there that you're going to head higher. That's why we play it level to level trading, because you can map out your support and resistance and map out, what you exactly want your trades to be. So I do not have an exact bias. I thought we would probably get a little bit more short action on this original sell-off, but obviously people still very excited about equities, which makes me think that the 45.45, maybe 45.60 level is definitely still in play. But we need to get above this high. And if we don't, or if we tag this level and immediately come back down, obviously 45.11 will be support, 45.95 will be support, or 44.95. And then down here at 44.80 is very critical. So if we go back below 44.80, then we could be deviating back into this, kind of range that we were in below. Very much something to look out for. But right now we're making a higher high. Market structure is broken. It's likely to make a higher low. So things do look good on the equities side of life. But unfortunately, crypto is really selling off this news. And one thing, I do want to mention just in the context of the ETF approvals is this can be kind of construed as like a XRP 2.0, if you will. The court case was positive, but the SEC still has ammo left in their tank to potentially either, cut down or deny or delay ETFs based on other reasons, or obviously take this to the Supreme Court. So they've still got options in the courts. They've still got options for lack of approvals. which doesn't make this, a done deal. It's not, life changing. And in my opinion, on something that is that impactful to immediately get cut back, 30% of the rally on the next day doesn't breed a lot of confidence in that news being a fantastic event. I wouldn't call it a news failure because we did have a nice move, but we are failing after, the day after, and that's certainly not positive for the Bulls. So we did not make it to the 28.3 level that I thought we would make it to, but we did make it to 28K flat, 28.15 to be exact. And now we're hovering at confluence of, this high right here from back when we bounced on the 17th, which was, 27.1, 27.2. And then we've got the weekly VWAP sitting right here, which is where price is currently bouncing. So we do know that confluence of support will typically play as support. But, to move higher, you need to get above both of these lows right here. And obviously it's been getting cut back down. So if we do make a play higher, we'll look to maybe short again on that, on a rejection, and then, take that to 26.7, or then it accepts. And then you try to break the market structure. So if you break above these highs, then market structure is broken and you're likely to grab here or potentially the recent high up here. So, and of course, market structure is, so this is a higher high, right? Now we're forming higher lows, which is positive, but this could obviously just keep forming higher lows until you either form an equal low or a lower low, right? So to break that kind of lower low cycle, or it's higher lows in this context, but now this is a lower low compared to this, low, right? So to break the market structure, you need to get above this. And then that would form, a temporary higher high. And then obviously you'd have a higher low put in from this higher high. And then you just keep then you hope that you're just moving higher and higher, right? So that's kind of the outlook here. But things don't look positive to me. Again, we're basically selling off this. You're watching Bitcoin, tag that weekly VWAP again. So in my opinion, I am short biased because of how, much we've sold off from what should have been good news. So 26.7 is next up in my book. And then below 26.7, again, talking about deviation, this could just be one larger deviation back into this range, which would be very, very ugly for price action. Typically that would, you'd expect it to grab the recent low of the range. So certainly not looking positive, but again, I wouldn't recommend just start shorting here. This is actually what many would consider a long opportunity. You set the long, set the stops at the low, and then you try to play it higher. Or if you do want to short, wait till it breaks the VWAP, because it's been wicking around the VWAP. Wait till it breaks the VWAP, and then you can trade it down to 26.7. So looking at ETH, it's very similar. Confluence is nearly identical, sitting at that 1695, 1700 level. Weekly VWAP is sitting right there. We are trading at the top end of the range from the drop lower. We're trading around this high right here, obviously, and these highs, over here, as well as, over here. So we do know that this level, was solid resistance. Now it's turning into some sort of level of support. So if you wanted to long, you set your stop right here at this low, try to trade it back up to 1715 for either a rejection or an acceptance higher. And very similar to Bitcoin, to break the market structure, to have a chance to head higher, is you want to break that level, and then which is about 1720, 1722, and then you can ride that back up to the highs. But again, in my opinion, things just do not look positive. We're selling off this entire, not the entire rally, but we're selling it off, on the day after. We've got ETF, decisions on Friday. Usually the market should be excited and pushing higher on this type of news, and it's not. So it's not an official news failure, but it's not moving higher on what was probably the best news we've received in a long time. That's worrisome. Makes me think we're going to head lower. And of course, if we do head lower, we're deviating back into the range, which typically will imply grabbing the lows of the range. So very much something to consider. Doesn't mean it will happen, but if we trade back lower, we're back in this range, it becomes a lot harder to get back out. So the first place we'll look, if we do trade back into the range for a higher high, is obviously this 1640 level, because you've got your lower low here, higher low, higher low, higher low, right? So if we drop all the way back down, we want at least an equal low, which will keep the market structure intact. So 1640 is where you really want to hold for ETH if we fail here at the 1696 level. And then for Bitcoin, we've got this lower low, higher low, higher low, higher low, higher low. So we want 20, and actually that higher low is right at 26K. So basically 26K needs to hold for Bitcoin if we deviate back beneath 26.7. So that's something to consider. Again, if you missed shorts this morning, that's why I gave you the long setup, because there is a clear long here. You set your stop at the low and you long, or again, you short on the break of the lows. Same goes for ETH. You can set your long with this stop right here, or you short on a break of the lows. So clear trades there for ETH. I hate to just be bearish and suggest trades that have kind of already played out throughout the US session, but that's why you sit in the TTC community, because we give those trades to you in the morning before the market session. We give you a bunch of reasoning, we give you some ideas, then you take it forth with kind of how we're trading. Now you're getting kind of what happened, what could happen, and then into the end of today's session. And in my opinion, I think it's more likely that we end up heading lower towards the end of today's session. I am positioned short. But again, you probably should have been shorting, up here, instead of, shorting all the way down here. So there is a long opportunity. There's also a short opportunity, very clear in validation for both. I personally am short. And we'll have to see how things end up playing out. So remember, tomorrow is PCE index at 8:30 a.m. This is going to be a big, big number, because remember, the Fed is quote unquote data dependent. If inflation is flat or rising, not helping the Fed, markets should not do well in that environment. But if PCE is dropping, remember the expected number tomorrow is 4.2%. So for core, so if core is 4.2 or lower, that's good, but it's still not great, because remember, it's ticking up. So if it comes in lower than 4.2, you're going to see markets react extremely positively. 4.2 or higher, probably not going to be good. It'll probably breed some volatility, but that implies inflation is sticky. Again, that's not helping the Fed's case, probably will not help the markets. So we'll obviously, we'll have trading rebellion tomorrow. We'll dive into everything that's going on after PCE. But if you're watching now, please remember 8:30 a.m., you're going to see some fireworks pop off, and it's going to be PCE. So keep CNBC, Fox Business, or whatever Twitter alerts you have on. We'll also be posting on Twitter. We'll be posting in our community. So if you don't have a TV available or are busy, we'll be posting everything that we're seeing. So keep a close eye out for that. A lot of big trades will be made around PCE tomorrow, because remember, the Fed is data dependent. So good luck. Happy trading. See everybody tomorrow.